Grok walks into the keeper's cave with 10 haunches of mammoth meat. He worked 3 whole moons to hunt that. The keeper nods, marks 10 notches on a counting stick, hands it to Grok. "Your meat is safe here," the keeper says. "You can take it back any time." Grok feels good about this. His meat won't rot, won't get stolen, and the keeper even gives him 1 extra small piece every winter for the service of holding it. But here's what Grok doesn't see. The keeper waits until Grok leaves, then immediately takes 9 of those 10 haunches and walks them over to Thok, who needs meat to get through winter. Thok promises to pay back 11 haunches next spring. The keeper marks this on another stick. Now Grok still has his counting stick that says 10 haunches. Thok has 9 actual haunches in his cave, and somehow 19 haunches of value exist in the tribe's economy, even though Grok only hunted 10. The keeper didn't create any new meat, but he created something that everyone agrees counts as meat. And that's not a glitch in the system. That's the whole point. So let me walk you through how this works, because once you see it, you can't unsee it. And you start to realize the entire foundation of what we call banking is just a very elaborate version of the keeper's trick. The basic model is simple. You have a cave economy. Hunters bring meat. Meat rots, so you need a keeper with a cold, deep cave. The keeper offers a deal. "Bring me your meat, I'll keep it frozen and safe, and I'll even pay you a tiny bit extra every winter as a thank you." Sounds good. You agree. The keeper now has a pile of meat, but the keeper notices something. Not everyone comes to take their meat out at the same time. Most meat just sits there, frozen, doing nothing. So the keeper thinks, why let all this meat sit idle when Thok over there needs to borrow meat to survive winter? I'll lend him some. I'll charge him 2 extra pieces of meat for every 10 he borrows. That's a better deal than the 1 small piece I'm paying Grok. The difference is my profit. And here's the key insight. The keeper doesn't need to keep all the meat in the cave. He only needs to keep enough to handle the daily withdrawals. In the modern banking world, this is called the reserve requirement. In our cave, let's say the chief mandates that the keeper must always have 1 out of every 10 haunches available in case someone wants their meat back. That means for every 10 haunches deposited, the keeper keeps 1 and can lend out 9. Now here's where it starts to multiply. Grok deposits 10 haunches. Keeper holds 1, lends 9 to Thok. Thok takes those 9 haunches and, because he's smart, immediately deposits them with the keeper for safety. Now, the keeper has 9 new haunches. He keeps 0.9 haunches as reserve, lends out 8.1 to Morg. Morg deposits those 8.1. Keeper keeps 0.8 to 1, lends 7.2 to 9. You see where this goes. When you run the math all the way down, Grok's original 10 haunches turn into 100 haunches of money in the economy. 10 actual haunches of meat are now supporting 100 haunches worth of claims and deposits and counting sticks. The tribe's money supply just increased by a factor of 10, and nobody hunted a single extra mammoth. But you might be thinking, wait, this only works if everyone keeps depositing the meat back with the keeper. What if Thok just takes his 9 haunches and eats them? Well, that happens sometimes. But here's the thing. In a developed cave economy, most transactions don't even involve moving meat anymore. Thok wants to trade with Zara for some furs. Instead of withdrawing 9 haunches, walking them over to Zara, and having her deposit them right back, they just transfer the notches on the counting sticks. The keeper marks down Thok's stick, marks up Zara's stick. The meat never moves. It's just accounting. And this is where you realize the entire system runs on a very fragile kind of trust. Everyone has to believe that if they show up with their counting stick, they can get their meat. As long as everyone believes that, nobody actually shows up. And as long as nobody shows up, the keeper can keep lending out meat that technically belongs to other people. Now let me tell you about the winner of the broken trust. There's a bad hunting season. Rumors spread that some borrowers can't pay back their meat. A few tribe members get nervous and go to the keeper to withdraw their full amount. The keeper pays them, but word spreads. More people show up, the keeper pays them too, but now he's running low. He only kept 1 haunch for every 10 on the books, remember? By the time 20 tribe members show up, the keeper's reserve pile is gone. He has counting sticks claiming 1,000 haunches, but only 30 actual haunches in the cave. This is what modern finance calls a bank run. And here's the dirty secret. Every bank, every single one, is fundamentally insolvent if everyone asks for their money at the same time. The system only works because of the statistical assumption that they won't. You might think this makes banking fragile and dangerous, and you'd be right, but you'd also be missing the point. Because the people who designed this system knew that. They weren't trying to make it safe, they were trying to make it profitable. So the chief steps in with a new rule. He declares that the tribe will back every deposit up to 250 haunches. If the keeper runs out, the tribe's emergency stores will cover it. This is called deposit insurance. In the modern world, it's the FDIC, created in 1933 after thousands of banks collapsed and people lost everything. The insurance caps at $250,000 per account. And this does something psychologically brilliant. It makes people stop worrying. They know their meat is safe, so they never come to withdraw it, which means the keeper never actually has to have it. But now you're asking yourself, if the reserve requirement is the rule and the keeper has to hold one haunch for every 10, doesn't that limit how much money the keeper can create? And the answer is theoretically yes, practically no, because here's what actually happens. The keeper doesn't sit around waiting for deposits to come in so he can make loans. He does it backwards. Someone walks up and says, "I need to borrow 90 haunches." The keeper says, "Sure," and just marks it on a stick. Boom, 90 new haunches of money exist. The keeper just created a deposit out of nothing by issuing the loan. Then, and only then, does the keeper worry about the reserve requirement. If he's short, he just borrows a few haunches from another keeper's cave at a very low cost, or he attracts a new depositor by offering a slightly better deal. Loans create deposits, not the other way around. This inverts everything you thought you knew. You thought banks were intermediaries. You bring them your savings, they lend it to someone else, they take a cut, but that's not what's happening. Banks are money creation engines. They're not lending out existing meat. They're conjuring new claim tickets into existence and then figuring out the accounting afterward. And here's the part that makes it even stranger. The reserve requirement I've been talking about, in the United States, as of March 2020, it's zero. The Federal Reserve dropped it to 0% during the pandemic and just never brought it back. That means banks don't technically have to hold any reserves at all. The thing we've been told is the safeguard, the limit. The rule that keeps banks from creating infinite money doesn't exist anymore. So what actually limits them? Two things: profitability and capital requirements. Profitability is simple. The keeper only lends meat if he thinks he'll get it back with interest. If Thok looks like he's going to get eaten by a saber-tooth before spring, the keeper doesn't lend to him. Every loan is a risk. The keeper has to pay his cave workers, maintain the cold storage, cover the deposits he's paying interest on. If the math doesn't work, he doesn't lend. So the real limit on money creation isn't a regulatory rule, it's the keeper's greed balanced against his fear. Capital requirements are more technical, but way more important. Capital is the amount of the keeper's own meat he has to keep in the game. Think of it like this. If the keeper lends out 1,000 haunches total, the chief says he has to have at least 80 of his own haunches set aside as a cushion. If loans go bad, that 80 gets eaten first before any depositor loses anything. The ratio varies depending on how risky the loan is. A loan to the chief's son? Low risk, less capital needed. A loan to a new hunter nobody knows? High risk, more capital required? This capital requirement is the real constraint. It's why banks can't just create infinite money and lend to everyone. Every new loan requires the bank to set aside more of its own capital. And capital is expensive. It's profit the bank could have paid out to its owners but has to keep locked up instead. Let me show you how this plays out in real terms. Grok deposits 100 haunches. Under the old rules, the keeper held 10, lent 90 to Thok. Thok deposits those 90 with another keeper across the valley. That keeper holds 9, lends 81 to Morg. This keeps echoing. By the time it settles, that original 100 haunches has turned into 1,000 haunches of money supply. 10 to 1 multiplication, but here's what nobody tells you. That multiplication depends on everyone playing along. It depends on Thok depositing the meat instead of eating it. It depends on the second keeper lending to Morg instead of sitting on the meat. It depends on nobody panicking. The moment someone breaks the chain, the whole multiplier collapses. And the keepers know this. So they manage it very carefully. They advertise safety and trust. They build big, impressive caves. They hire shamans to tell everyone the system is sound. And for the most part, it works. Until it doesn't. Every few generations, something breaks. Maybe it's a hunting crisis and borrowers can't pay back loans. Maybe it's just a rumor that starts spreading. People rush to withdraw, the keeper runs out of reserves, other keepers panic and stop lending to each other. The money multiplier goes into reverse. 1,000 haunches of money supply shrinks back down to 100. Credit freezes. The tribe goes into what we'd call a recession. The chief steps in, promises to lend unlimited meat to any keeper who needs it, and slowly trust rebuilds. But here's the kicker. The system that caused the crisis is the same system that gets rescued and rebuilt. Because the alternative, a system where keepers only lend out meat they actually have, would mean far less lending, far less growth, and far less profit for the keepers. Nobody in power wants that. So where does this leave you? You're living in an economy where most of the money isn't real in the physical sense. It's just accounting entries, claim tickets, promises. The bank tells you there's money in your account, but there's no vault with your cash sitting in it. It's been lent out 9 times over. And that's fine, as long as you never need it all at once, and as long as everyone else doesn't need theirs either. Some guy named Marcus walks into a bank in 2008. He's got $45,000 in his checking account. He wants to buy a car in cash. He goes to withdraw it. The teller looks nervous, says he needs to call the manager. The manager comes out, asks why Marcus needs that much cash. Marcus says it's his money, he can do what he wants. The manager says, sure, but we don't keep that much on hand. You'll need to come back in 3 days. Marcus gets annoyed. It's his money. Why can't he have it now? The manager explains they need to order it from the central vault. Marcus leaves frustrated, but comes back 3 days later. He gets his cash, but the experience rattles him. His money wasn't actually there. Now multiply that by 1 million people. That's a bank run. And the bank fails in 3 hours. Let me hit you with 2 quick asides. First aside. You ever notice how banks have those massive marble lobbies and columns and vaults with big shiny doors? That's not for security. It's theater. It's designed to make you feel like your money is in a very serious, very permanent place. It's the cave equivalent of the keeper carving intimidating symbols on the cave walls so you trust him more. Second aside, the phrase sound as a dollar used to mean something was reliable. That phrase was invented when dollars were actually backed by gold. You could walk into a bank and exchange your paper note for actual metal. That ended in 1971. Now the dollar is backed by nothing except the collective belief that it's worth something, which, to be fair, is also how the keeper's counting sticks worked. So maybe nothing's changed except the scale. Here's the part where I come back to the opening. Grok walked into that cave with 10 real haunches of meat. The keeper turned it into 100 haunches of abstract value. Nobody hunted more mammoths. No new resources entered the economy, but everyone's counting sticks say there's more wealth. And in a functional sense, there is, because Thok borrowed meat and started a fur business. Morg borrowed meat and built better spears. The economy grew. The multiplication of money enabled multiplication of production. But here's the trade-off. That same system makes the economy incredibly fragile, because all that new money is built on debt. Thok owes the keeper, Morg owes the keeper. If they can't pay, the keeper's accounting breaks. And because the keeper lent out meat that was never his, when the debts go bad, it's Grok who loses. His counting stick says 10 haunches, but there's only 1 actual haunch left in the cave. So let me give you 3 things to take from this. First thing, your bank deposit is not your money being stored. It's your money being used as raw material for the bank's lending business. You're not a customer storing wealth. You're a creditor providing capital. The bank owes you, but that debt is only as good as the bank's ability to pay. Second thing, the money supply is not a fixed amount of resources being shuffled around. It's a dynamic, constantly expanding and contracting ledger based on how much banks are willing to lend and how much people are willing to borrow. When credit expands, money is created. When credit contracts, money disappears. This is why economists obsess over interest rates. Lower rates mean cheaper borrowing, which means more money creation. Higher rates mean expensive borrowing, which means less money creation. The central bank, the Fed, is essentially the chief deciding how easy or hard it should be for keepers to play the multiplication game. Third thing, the system runs on confidence, not reserves. The moment people stop believing they can get their money when they need it, the system collapses. This is why every financial crisis involves some kind of confidence restoration measure. Bailouts, deposit insurance increases, emergency lending. It's all designed to make you believe the counting sticks are still good. And here's your cynical closer. The cave economy grows because the keeper creates phantom meat. The modern economy grows because banks create phantom money. We pretend it's complicated. We write regulations. We build insurance systems. We have people in suits testify before Congress. But strip all that away, and it's still just Grok handing his meat to a guy who promises to keep it safe while immediately lending it to 9 other people. And the only reason it works is because Grok never comes back to check. Nature doesn't create money. Banks do. And the tribe pretends not to notice because everyone's counting stick says they're richer than they were yesterday. The fire keeps burning as long as nobody asks where the wood came from.